Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about China CRSC interim report. China Railway Signal and Communication Corporation, Limited, offers a wide range of services and products to the rail transportation industry. The company's main business segments include Rail Transportation Control System, Design, Integration and System Integration services, General Engineering Contracting, Construction, Installation, Testing, Operation, and Maintenance services for rail projects. Others, plus production and sale of signal system products, communication information system products, infrastructure equipment and information systems, plus municipal engineering project services and other construction project services, plus system delivery service, investment management, technical exchange and trade activities, and project management services. The recent surge in China Railway Signal and Communication (CRSC) stock price can be attributed to several factors within the broader railway and infrastructure sectors. A key driver is the robust spending on high-speed rail and infrastructure projects, which has led to increased investor confidence in companies like CRSC. The Chinese government's commitment to expanding its rail networks through connectivity projects with ASEAN nations also contributes to this trend. Additionally, CRSC's own financial performance has shown improvement, with a year-on-year increase of 1.34% in net profit attributable to the parent company. International collaborations, such as the Memorandum of Understanding signed with Vietnam Railways Corp., have further boosted investor sentiment. The general rise in Hong Kong's railway and infrastructure stocks also supports this trend. While the exact stock price increase for CRSC over the past year is unclear due to a lack of precise closing prices, these factors collectively suggest that the company's stock has benefited from the positive environment within the sector. The primary drivers of revenue growth for a company can be attributed to several key factors. Firstly, an increase in intellectual property rights, such as invention patents and software copyrights, has contributed significantly to revenue growth. Additionally, investments in research and development, R&D, have shown substantial growth, with both expensed and capitalized R&D investments increasing by 6.99% and 19.61%, respectively. The company's overseas sector has also experienced a notable increase of 55.92%, while the urban rail sector saw a rise of 12.85%. The general contracting and other sectors have grown by 29.93%, with high-speed railway renovation projects increasing by 74.86%. Furthermore, completed but not yet settled contract assets have increased, driving revenue growth. New advances received during the period and opening balance recognized as revenue have also contributed to the company's revenue growth. On the other hand, some sectors have experienced a decline in revenue. Equipment manufacturing has seen a decrease of 9.3%, while system implementation has decreased by 1.7%. Property tax, land use tax, and stamp duty have all declined significantly, with decreases of 12.1%, 18.5%, and 23.2%, respectively. Overall, the company's revenue growth can be attributed to a combination of factors, including increased intellectual property rights, R&D investments, and growth in various sectors. However, some sectors have experienced declines in revenue, which may require attention from management to mitigate these losses. Net income and profit margins underwent significant changes in the given period. Initially, net income increased by RMB 61,997,934.13, but later it decreased by a substantial amount of RMB 383,543,439.05. However, this decrease was followed by an increase from a loss to a gain, indicating a turnaround in fortunes. Profit margins also saw fluctuations. The gross profit margin in China increased by 0.21 percentage points to 29.28%, while the operating and net profit margins decreased significantly. The operating profit margin dropped from 191.3% to 224.5%, and the net profit margin fell from 188.4% to 81.6%. These changes suggest a decline in profitability, likely due to increased costs or reduced revenue. Based on the financial summary, it appears that the majority of the evidence suggests the company is experiencing difficulties in generating positive operating cash flow. Out of 15 extracted summaries, 9 indicate a negative operating cash flow, while only one mentions a positive operating cash flow. This overwhelming evidence leads to the conclusion that the company is indeed generating negative operating cash flow. The company's debt level has undergone significant fluctuations over the past year. While some sections indicate a substantial increase in long-term borrowings, such as an 81.43% rise from last year, page 87, and a $2.5 billion increase, page 88, other sections show a decrease in total debt, monetary funds, by RMB 1.38 billion, page 244. Additionally, the company's long-term borrowings have increased from RMB 3.33 billion to RMB 6.27 billion, page 344. Regarding interest expenses, there are mixed signals as well. While some sections indicate a decrease in finance costs by 84%, page 143, and a slight decrease in interest expenses, page 147, others show an increase in interest on long and short-term borrowings by RMB 1.21 billion, page 407. Furthermore, the company's interest expenses have increased significantly from last year to this year, page 370. In conclusion, while there are some indications of a decrease in debt level and interest expenses, other sections suggest that these metrics have increased significantly over the past year. Management is emphasizing the importance of innovation-driven development, prioritizing independent innovation, and investing in talent training to enhance the company's reliability and safety. The focus is on upgrading China's railway network through core technologies, leading to a stronger position in the high-speed railway industry. Key strategies include improving equipment health analysis and maintenance efficiency, developing intelligent transportation solutions with UAV AI inspection and emergency command systems, focusing on rail transit, new energy, and strategic emerging industries, consolidating and expanding advantages in the entire rail transit industrial chain management, is also adapting to changing policies by adjusting the use of proceeds from H shares. Overall, the company aims to drive growth through innovation, technology, and strategic investments. The company has a history of paying dividends to its shareholders. According to the financial summary, specific amounts were mentioned for the years 2024 and 2025, totaling $103,320,684.61 and $88,036,153.50 respectively. Additionally, there are records of dividend payments in RMB, amounting to 237,890,747.76 under CASCO and 1,008,000 RMB. However, the company has not engaged in share buybacks, as per the provided information. Concerns about inventory buildup or supply chain disruption exist. The company's financial summary highlights several red flags that indicate potential issues with inventory buildup and supply chain disruption. On page 86, a backlog of on-hand orders is noted, suggesting that production may not be keeping pace with demand. Additionally, the recognition cycle for revenue from equipment manufacturing has shortened, which could lead to delayed payment or cash flow problems. Furthermore, pages 230 and 275 reveal more concerns. Inventory write-downs due to obsolescence and differences between actual sales and estimation are affecting profit/loss, indicating that inventory levels may be too high. The increased raw materials balance on page 275 also suggests potential inventory buildup concerns. These issues collectively indicate a need for the company to reassess its supply chain management and inventory control strategies to prevent further disruptions and losses. That concludes the financial summary for China CRSC. Feel free to comment below, and I will be happy to answer them when possible.